Hedron price action. Yeah, let's look at some of that. How about that?
Hedron price action sounds good to me.
All right, I got some. Here, I'll pull up this here. Let me know when you have my screen share up because I can't see it right now.
Yeah, we're up.
All right, cool. So this is the Hedron chart. There's a lot going on here. This is the 4 hour. But just like cool things to note here in the DMI, which is basically this instrument's trying to measure the momentum and the trend at the same time. So the white line is the momentum, and the green line is a positive bid trend, and the red line is like the seller's trend. So as the white line increases in strength, you want to see the red decrease and the green increase. And that would be like the most bullish situation where the white line is overall trend strength increasing on a green increasing line while red's decreasing. That would be the most bullish. So anyway, the green line is above the red line right now on the 4 hour, and that's good because we're actually bouncing off some key moving averages. Let's see if I can pull some of the moving averages up here.
Okay.
Moving average triple. And then like I like to use some of the base numbers for this is like base your inputs on the time frame you're using. So like if I'm using like a daily, like a month is like roughly 30 days. So I might put like for my second, I might use like 28 days because that's like a lunar month or whatever. So I might use that as like one of my moving averages. That's based on like something closer to like a harmonic timing frequency. I know that we've talked about that before in my past work, but anyway, some common ones like the daily. If you get bounces off the 21 moving average on the daily, that's like the best thing you can be looking for. And we have clear bounce off both the 21 and the 14 right here. So that's as like most of a bullish sign as you can have. I got to use a different mouse because that mouse is trash. I'm sorry for that, guys. Bear with me here.
Unprofessional.
I'm on my laptop. But this November 13th date is where that HSA auction starts for like a lot of the majority of the new T-shares coming on the auction. And so like I feel like this is like the last bit of run up leading up to some explosive climax going into that date. And the thing that I have to prove it is when you look at HEX back in 2021 in the summer when it was around, here we peaked at like, we made a triangle and we peaked at like 6 cents roughly, but we traded more around 5.5 to 6 cents. And then it was a triangle that broke up. And then now it did another of the same where it did like this double top that led into a sell off that then built a triangle and then led to this massive upside move on price during the Pulse sacrifice launch, which was your fundamental driver for price action. And then we call this consolidation under resistance when this happens in the price. And so what I'm looking for here on Hedron is a similar move of this triangle pattern forming under the all-time high resistance, and then some sort of an explosive move coming off into the auctions where Hedron gets burnt and becomes much more extremely more rare. And it's all because the values in the HEX stakes. Here's the Hedron chart against HEX. Same principle, but it's way above. This is the chart that I'm watching that's telling me, is Hedron making new all-time highs in a legitimate sort of way? So like this is where it's coming in from.
Okay. Yeah, it keeps going up. Do you think? Let's see, October 21st today. I mean, what do you think? November 1st, second week of November. What do you think it's headed?
I mean, I feel like we had enough chances to break down, and it's like against HEX. It's just doing the same. It's just doing the same sell-off pattern into key supports where these institutional candles have created space on the chart and they're being protected. And that's just fundamental, strong technical analysis. And then it's doing a smaller fractal of that same play. Going into that, it just seems to me like the bids are there. The DMI is saying, the strength of trend is strong. on a lot of the upper time frames. So I mean, here the red's never even crossed the green since August on the daily DMI. I mean, that's like going out back to the beginning of August. So, and that's with all the intense selling that we've received. So fundamentally, I just think that this is a good buy all the way around. And I think like the people that are selling these bags now are like losing out on generational wealth potentially, because this is a repricing of T-shares. That's what this event is all about. And the fundamental.
I don't know what could be bad news for it. Like I don't see. Do you see anything that could?
No, I mean, staking made it that much more, like give you a reason to hold it. You know what I mean?
Right. Staking.
It's just another thing, like, and then getting the ICOSA and like all those different levers that is working in the background is just building value in the ecosystem. And I would even extend that to this chart with the Pulse Dogecoin. Like this Pulse Dogecoin has such a limited supply, and now 1 million of the 6 million coin supply has been burnt. And it just seems to me like there's not enough supply out there to be. I mean, the liquidity pool's doubled basically, and that's recent. You know, like that's bullish. I mean, it's hard to deny that this coin is bullish in some of the most bearish times. And I mean, like upsides on this coin can be multiple of 10. You know.
And is that so? The TA, they had Pulse Bitcoin mining, the ASIC stuff came out too. How does that factor in?
Yeah, I mean, like that stuff factors in because it's just pumpamentals for this coin, right? Because it makes this coin more rare.
They're burning a ton. They burnt like 30-40% of the Pulse Doge supply or something like that.
I know for a fact that 1 million of them have been burnt for sure, if not more by now. And that's just amazing to me. So like this chart is making floors that'll never come back. And that's what I look for in an asset when I'm buying something, is like, what's an asset that even if it comes down 50, 60, 70%, what's going to be here still accruing value for me in like 2 to 5 years? And if it
Okay.
Go ahead.
I was just going to on the burning point too, because we had conversations around what effect burning has on coins. You know, this one has such a low supply. You know, it's only like a few million coins or so.
Right. So it seems like it'll magnify the effect of burning. And the effect of burning is that it makes the price go up because less become available on the market. And now that you've added an added utility that this now provides yield as well, right?
David James, 33% burned. Yeah, that was incredible when I saw the numbers today. Wow. Because a lot of people are trading it in for the ASIC token that they can stake, and then that mines Pulse Bitcoin. I think that's how it works.
And then look at the Pulse Dogecoin against HEX valuation. Like, look at this thing; it's at the all-time high. It just tapped it today. Isn't that amazing? Like in a bear market, when we value HEX so highly, and it's a super valuable coin that provides that amazing yield. You know, that's what underlies this whole system. And then you have like a coin like this that's holding value against it. And so I just, you know, I look at that type of stuff and I'm like, you know, do I want to allocate toward it? And, you know, if I'm going to allocate, can I definitively say, is this like something that's going to continue to go up in valuation against HEX? Or is it something that won't? And like burning is a huge factor that plays into how a coin can become more quickly valuable in those terms.
Nice.
So yeah, I mean, like Pulse Dogecoin, goodbye. We were actually calling the breakout down here in the private Discord. It was like on the 7th or 8th. And then it ran, I don't know what's it ran so far, 84%. So it's been a great trade for those who've stayed with it. HEX overall is stuck in this liquidity band. And so we'll get a little bit into liquidity now. So basically I drew this yellow box to try to represent like where the majority of the liquidity is sitting right now. So if I go in here into the liquidity on HEX and to the USDC pair, you can see here this basically where my yellow box is inside of this tight range. So like when you're deciding, like if you're looking to provide liquidity on HEX, or if you're trying to look where to provide liquidity in general, you want to provide liquidity on two coins that you find value in long term. So like you could say like USDC would be one good option, right? Because it's a long-term consistent value of storage. And then, you might want to pair it with like a crypto that's going to be here for a long time. And like, so that'd be like Ethereum, HEX or something along the lines of a derivative of something like that.
Are there any can't lose pairs? I mean, we got Hex USDC. You could do Hex
So
Hedron. Is it?
there's
Yeah. What?
exciting things like ICOSA. Like if you look at the HEX ICOSA pair, it trades in such a tight range that it's something that you can kind of set it and forget it and then just be left with some USDC at the end. And then when the price leaves you behind, it doesn't really leave you behind in a way that you suffer so much impermanent loss that you can't continue to accrue fees in the newly produced range. So if I bring that up for you, 1 second. This laptop's slow.
I guess it's the trick too. Like always to avoid impermanent loss, you want to provide liquidity to pairs that, regardless of what they do, you always want. Like, is it good to like Hex and like a stable ish against Hex because you always want the other side? Is that I guess what are the tricks there? Would you get into it?
Yeah, that's kind of what like my theory would be was like trade. I mean, there's a couple ways you can decide how you want to trade. Do you want to trade majority like and this decision should be made fundamentally on what type of market are we in, I think. So like if I'm in a bear market, I'm not afraid to put HEX up against USDC because if it goes up, you can make money on the swing high, and by selling HEX higher, or if it goes down, you're basically selling it at a level where you're comfortable getting rid of it for USDC. So yeah,
Yeah.
I mean, bear market, it's good to pair with a stable coin.
Is that because we talked about this last time too, of a way to like sell coins without hurting the price by doing LP, but there's also the other side of buying coins. Like it's like you could use LP to be always buying because you're getting the other side of the you're getting those coins back for that particular pair. So I guess can you how does that work, or how I guess how could you silently buy coins in that way?
In that way, you can basically set. So if you wanted to provide, if you had some USDC and you wanted to provide liquidity on HEX, and you wanted to buy, let's say you wanted to buy HEX at a penny, you could be like this guy here who put this huge spike of liquidity in here. Let's see, how much is it? Somebody put $50,000 of liquidity here at 1.5 cents. So that if the price shoots down here, he's going to be left with HEX instead of USDC because the USDC will be swapped at that point. If the price continues to move slightly lower, then the bulk of his liquidity would get absorbed, and he would be left with the other side of the token.
Some of these tricks are just a very interesting way. Like you can buy and sell coins using liquidity other than market trades and stuff, or even limit trades.
Yeah, because limit orders on blockchains don't always get hit. But if you provide like $5,000 of liquidity, like in little chunks, like down here where there's like $4,000, $4,000, $4,000, $4,000, then as the price slips, like you're gonna get filled at every level. They're fractionally smaller levels. Like we're talking like 1,000th of a dollar movements, but you're getting cheaper and cheaper prices for each tag each time your liquidity is getting tagged. So if price drops too far, then is when you suffer impermanent loss on things. Because if let's say you set, okay.
No, I'm just going to ask if the price drops too far. Is that the part where you'd want to be on the other side? Like you don't, however far the price drops, you're okay taking that other coin. Like
right, pretty much. Like you have to be comfortable with your long-term thesis enough to take. Like if you were willing to put some money here on like at 2 cents, like right here, in this liquidity, and then the price went to 1. Well, you're down 50% on the coins that you got at 2 cents, but that price that went to 1 penny might only be down there for a short amount of time, and then you might be back in profit, or you might be ranging down there for a while because next year might not be pretty. I tend to think it won't be that way, and we could do some macro analysis if you wanted to kind of explain that.
Yeah, for sure.
Did you have a question?
I was just gonna say maybe it's a quick one too. Like, are there any pairs you would that you would like always stay away from as far as providing liquidity for? They're just like super risky. Like you would never want the other side or things like that.
I mean, it's hard to like people that are providing liquidity on any new coin. Like here's an example like of
New coins.
New coins are probably like ones that you're taking a risk, right?
Yeah.
Even just with this weight token, it's got $6,000 liquidity in it. But like if you put, let's say you wanted to put 3,000 liquidity in here, like what's stopping somebody who free claimed from just taking that liquidity out of the pool? And then you're left with weight coin that's down 50%. And you can see it's right now trading under levels that it previously closed on above multiple times. 1, 2, 3, 4, 5, 6, 7, 8, and like 9 times it bounced off that level. Now it's starting to trade below it and close below it. So,
but in order to take all that 6K away, that's assuming they had the 6K like at a price you'd like, right?
Right. Yep. 100%. Yep.
But they could have put the risk 6K, like part of the 6K at like 10 cents or something. They'd be like, okay, it's never. I'm just going to be buying it really, really high if I try to take all of it away.
Correct. I'm saying if like you were going to put in, let's say you were going to put in liquidity to trade inside of my yellow bands here, because that's where like the majority of the price traded. It traded here for like 100 days. It's traded inside of that band, roughly with just a few spikes above. But now that it's trading below, would you want to be the guy putting liquidity, like some liquidity in above this level now? I wouldn't. I would rather put liquidity in slightly below as it traded in the range below. But that's all gets into the strategy of how you see the liquidity on the liquidity charts on Uniswap. So that you're playing a game of football here. Like if the red line is a line of scrimmage or the ball, you have to kind of try to predict, based on what's happening in the global markets, is there enough pressure and forced selling to make people want to take the slippage and push the price this way? Or is there enough demand to push a price through this thick liquidity wall and get us moving, to higher prices at an increased rate? Because I've seen us on Hedron get above and then crash back into these walls before, just in recent history. But then smart whales used it properly as support, and they kept accumulating at those levels.